The following is a public access production. It is not produced, sponsored, or endorsed by this station, the local government, or the cable providers. The program producer is solely responsible for the content of this program.
Hello and welcome to John McHugh. Thanks for joining us. Today we have a treat. We've got a great mortgage insider, Lesley Santini, Vice President of Mortgage Lending with Guaranteed Rate. Lesley, thanks for joining me.
Thanks for having me back, John.
Yeah, I'm glad to have you here again. Last time we got a phenomenal reception to your mortgage update. People really were interested to see where it was, and so we had to have you back again quickly to discuss the current mortgage situation with us. I would love it if you could give us an overall market update, and we are heading to the end of 2025, and we're going to be heading into 2026, so we've got a lot to talk about today.
Okay, yeah, I'd be happy to give you an update. We had a good 2025, better than the past years. We saw the interest rates peak and have been coming down towards the end of 2025. And we are going to see continuous easing of that going into 2026. We see a little bit of a softening employment and cooling inflation, and that's all good news for mortgage rates. So we'll see them go down a little bit more into 2026. That helps buyers with affordability. We've seen a lot of 3% interest rates going away, and more buyers with 6% interest rates.
That's really interesting. Yeah. Can you expand a bit on that? Because we're all thinking anyone who's got a 2 or 3% mortgage rate, they'd want to hold on to that, but now 6 is more the norm?
Yeah, it is. That lock-in effect, right?
For the lock-in effect.
For 2 years, 2-3 years, we had sellers didn't want to sell. They didn't want to move. They didn't want to leave their interest rates. So now we're seeing sellers open to moving. They just have to.
They were stuck for a while because if they're in their home and they're already paying a 2% mortgage rate and the current rates are well over 2% to 6 plus, why would they sell is what a lot of the sellers have been saying. If they're already paying 2 and they have to get into a new mortgage, it would be much higher. So tell us a little bit more about the differences now where we can see more people and more inventory coming on the market.
Yeah, the more inventory is very, very helpful, as you can see, right?
For sure.
So we're optimistic 2026 is going to have more inventory. And now the lock-in effect is families changing. You know, people are just not going to stay in their house. It's too small for them.
Right.
You know, so they're going to forego their lower interest rates and take the higher rates. But the rates are still good. They've peaked and they've come down, and they're willing to take on those new rates for changing lifestyles. And
in the Wellesley office, you are the chief mortgage lender there at Coldwell Banker, and you work with everybody. But I know in our last meeting when you addressed the entire office, you were saying that the projection for mortgage rates in 2026 is for them to be a little bit lower and to soften a bit.
Yeah, exactly. So they've already come down. I mean, we were up at 7% in the 7s, and they're now down, the national average is around 6%. And we are expecting that to come down a little bit more in 2026. On $1 million mortgage, that's $1,000 a month savings.
Huge savings and more affordable. Bring in more people.
You can see the affordability.
Yeah.
You know.
Now tell me a little bit about the cooling inflation that you were talking about, because I know that inflation and employment all make a marked impact on the overall mortgage rate. So when we're saying cooling inflation, prices are supposed to stop rising a little bit. When do you see that rise in the reduction peaking, and what do you give us as a timeline for that?
Yeah, we just had the CPI report.
What's the CPI?
The Consumer Price Index, which is the cost of goods.
Got it.
So we just had the report a couple days ago, and that we expected it to go up a little bit more than it did, and it really just stayed in line. So the cost of goods is staying in line. It's not going up as high as they were projecting it could go up with the tariffs. So that's all good news. And that was the concern that the Fed had, was the inflation. So with the inflation coming down to the level that the Fed wants it, the Fed is more open to cutting the interest rates.
See, you're so great at explaining it. If I don't want to cut you off, but I want to let everybody know, she's an expert in her field, like I'm an expert in listing and selling a home and doing what I need to do to get top dollar as unobtrusively for my clients. So when I bring a client, be it a first-time buyer, someone who's bought 3 or 4 times, someone who's refinancing, to a mortgage lender, to have someone be able to break it down that easily is wonderful for everybody involved: the buyer, the seller, the agent, and specifically the client themselves. So being able to have someone like you that I can trust to break it down and explain it is wonderful. Yeah. So I appreciate the way that you explained that. It really makes sense, and it's another reason why you're a trusted mortgage broker and lender in our office, and most definitely with JohnMcHughRealEstate.com. The softening employment is another factor that's going to contribute to the overall interest rate. There's so many contributing factors, but the softening employment is something that, how would you weight that against inflation when it comes to the impact that it would make on the mortgage rates?
Yeah, that's a concern. So if we're seeing, the jobs reports, the unemployment actually just ticked up a little bit. So that's a concern. So the Fed doesn't want to see the unemployment go up. We want to keep that down. So what they're going to do is help by dropping the interest rates a little bit to help
balance it out a bit?
Balance it out,
yeah.
Exactly.
Okay. So we're saying it's hovering around 6%, and you're seeing the projection to hover around 6% into 2020?
Yeah, a little bit lower. Our adjustable rate mortgages, we actually have seen a huge uptick of adjustable rate mortgages.
What other types of mortgages are people taking?
So there are fixed rates or adjustable rate mortgages. Fixed rates are fixed for the 30, 15, 20-year terms.
And tell us a little bit more about the fixed rates. I'm interested.
Yeah, sure. The fixed rates are a little bit higher because they're fixed for that 30-year term or that 20-year or 15-year term. Adjustable rate mortgages are over 30 years, but only fixed for a shorter a period, and they will adjust. So a 5-year, a 7-year, or a 10-year is what it would be fixed for, and after that 5, 7, or 10-year period, it becomes adjustable. They are lower rates than a 30-year fixed, typically.
Adjustable from whose perspective and control?
So adjustable from what you're locked in at.
Okay.
So you're locked in at that interest rate.
So then they would go by the market rate or prime rate?
And then it would adjust based on the market rate.
So it's a bit risky?
It is a little bit risky. But right now, where we see rates coming down in the spread between the 30-year and the ARM, people are open to taking an adjustable rate mortgage for a lower interest rate,
right,
lower payment, and then they can always refinance that.
You see the options available? I mean, I think when you go to any singular lending institution, you get a singular option with their different topics and bullet points underneath. But when we work with a mortgage lender, you can have all kinds of variety and options to help people.
Yeah, I like to advise,
right,
just give them different options. Here's, if I have a first-time home buyer, I will maybe recommend that 30-year fixed if it's not much of a difference, because a lot of our first-time home buyer 30-year fixed products do have very competitive interest rates, and a lot of times it could be better than an ARM. And I wouldn't recommend an ARM for a first-time home buyer.
For sure.
But for someone with a large mortgage, a very seasoned buyer, seller, have had multiple mortgages, they like the ARMs. They know finances. They want a lower rate and a lower monthly payment, and we see a lot of those type of clients.
A lot of options. I want to take a short detour from the types of mortgages that we're discussing, because you're very active on Instagram. I see a lot of mortgage agents posting on Instagram, and I pick up tips here and there. It's Team Santini?
Yes, Team Santini Mortgage.
Team Santini Mortgage on Instagram. And I've seen a number of things come up as the detour I mentioned of mortgage agents speaking to their clients. Why did they just buy a new car at this portion during this part of the transaction? Why did they just make a major purchase? Things like that. Can you name 2 or 3 of the things that might make an impact when you're in the middle of a transaction based on your lender client?
Yes, definitely. Purchasing a new car for sure. Or one thing actually that people don't know, they have a car payment, all right? So they're turning in that car payment and getting a new car payment that's higher. So they think, I didn't do anything wrong because I already had a car payment. So why did someone do this, right? So he had like a $600 a month car payment. He turned in his car and got a $900 a month car payment. So he didn't think he's doing anything wrong. because he's just trading one payment for another payment.
But
it was higher.
Right.
So it did affect how much he can afford. It was just a home equity line, so it wasn't a big deal. We were just kind of pulling out some equity for him.
But these
to
are the things that
consolidate
make
some
all
debt.
the difference,
Yeah.
especially if you're a first-time buyer and you're a bit tentative to jump in. I've even brought clients in who didn't think they could do anything, or people who had all kinds of personal debt, business debt. They have a loan from a bank, or they have student loans, or they have 2 cars or something like that. And I've had them come in and sit with you. And just to give a breakdown of what the general reaction or response was, some of it could be, you need to pay off this credit card, you need to reduce the balance on this, you need to keep paying on time this credit card and make sure that your car payment is due, and blah, blah. Another one has been, for instance, you need to you pay off all 3 of these cards and spend a year cleaning it up and being on time, and then come back. Whatever the plan is, you have a different one for everybody.
Yeah, exactly. Every buyer is totally different, and we try to figure out a good plan.
It's
for
not
them.
my expertise, but my expertise in due diligence, fiduciary responsibility, is to connect my clients with people like this. It really helps everyone all around. So back to the types of mortgages. We were taking a look at the fixed rates. We were taking a look at the ARMs. What else is available and out there in 2025 that's going to move into 2026 and be popular?
Yeah, we see a lot of what they call portfolio mortgages, okay? So, if you're not a W-2 employee, or you don't have 2 years self-employed, that's the rule with self-employed borrowers. You need 2 years self-employed, 2 years tax returns. Or you're self-employed and you don't show a lot of profit, because a lot of self-employed people will, take a lot of write-offs and lower their income. So we have all sorts of products. We have bank statement products, or 1-year self-employed products, ways for self-employed people to get financing that's not traditional. This is a great one, a debt service coverage ratio loan. We call it DSCR, which is for investors. We can actually just use rental income on the property to qualify them for a mortgage. This is new within the last year.
Is that for a non-owner occupant?
For a non-owner occupied.
Excellent.
We can just use their rental income to qualify them for
That's
a
amazing.
mortgage.
Now that's real business. That's a real American dream scenario where you can come in and qualify to purchase it based on somebody else paying.
Right, exactly.
I love it. Something I never would have thought of.
Yeah.
That's great.
All these new portfolio products constantly adding new ways for non-traditional buyers to get financing.
And this is what I do too, because no 2 properties fall into the same box, and no 2 buyers or lenders would have it. Think about it. They don't all have the same debt. They don't all have the same income. Every single transaction, buyer and seller, is going to need a plan and a strategy put behind them, custom crafted for their home. And their home isn't the same as everyone else's, or the neighbor's, or the one that sold down the street. When you're a buyer and you need to speak to somebody, you need to have all of those options at your fingertips and a strategy and plan crafted just for you. And I don't know that you always get that when you walk into the corner bank. I'm sure you do. You get great service there. That's where I keep some of my money. But at the end of the day, having someone who's marketing your home that says your home specifically needs A, B, and C to show its best. Or if you did this and did that, that would be your best interest. Or maybe do nothing, because it's going to be most appealing to builders as it is, and you'd save that money of making any improvements that might not be the choice of your potential buyer. And this is what you're doing on the lender's end.
Yeah, exactly. And the other thing too is the big myth out there with mortgage rates. What's my rate?
Right.
Well, like you just said, every scenario is different. So when someone comes to you and says, what's the rate? Well, what's the scenario?
This happens
What's
to her
your
in
credit
restaurants. It happens to her all the
What's the
time.
rate? Oh my God. I'm like, well, what's your scenario? How much are you putting down?
Right,
What's your credit
exactly.
score? Is it owner occupied? Is it an investment property? So, there's no just rate out there anymore.
Right.
There's just hundreds of products and all different rates for those products.
What's the biggest mistake that home buyers make within 24 hours of putting a property under agreement?
I think they should reach out to me right away. Sometimes they don't. And sometimes they wait until they go, home inspection, okay, because usually that's done fairly quickly. But they'll wait until purchase and sales is signed, and it could have been a quick closing. So I think the biggest mistake is reach out to your mortgage broker, touch base with them right away, or at least from the mortgage side of what's a mistake.
Right.
Reach out to me and let me know you have that accepted offer.
That's really good advice
Yeah.
to make sure that we're all on the same playing field.
Yeah.
And I always say, after we work through the offer and we have an accepted offer, I'm going to connect you with a home inspector. I'm going to connect you with an attorney. You can use any purveyor that you like, but we usually have recommendations. So you want to speak to your home inspector, you want to speak to an attorney and your mortgage lender so that we're all on the same team and keep it moving forward with no surprises. Can I ask you, what's the most unexpected or misunderstood part of the mortgage approval process? When you get people in there, they fill out your paperwork, you have an online system. What's the most misunderstood aspect of the approval process?
I mean, some people don't understand like a lot of the paperwork that we asked for.
Sure.
Others totally do, but you know, some people don't understand why they have to provide some documentation to us. So it's definitely more streamlined than it used to be, but there are certain cases where we ask for certain documentation, and you know, or you know, they'll.
So do I.
Yeah, right. We're like, I'm like, we need your bank statement, and then they like white out their account number. Well, or only give you like one page, and it's like, you know,
Screenshots.
they don't understand. Like, well, here's my balance. Like, no,
I saw
we need
another
an
one on
actual statement.
Instagram. I'm John McHugh too on Instagram. Another one was send us the proof of funds, and they sent a photo of them with all their rings and stacks of cash like this, and that was the thing. That's
or like
funny.
a check, you know, like written out. It's like, no, we need to verify all that information. So. I mean, that's just the one thing.
Right.
Yeah.
No, that's good, and I like that a lot. And we discussed before outside of the studio what the biggest misconception about waiting for rates to drop would be. Because I think you could wait forever, just like when you're saying we're going to wait for prices to come down. So you're thinking that 2026 is going to be a great opportunity for both buyer and seller.
Absolutely. I mean, there's no timing the market, so it really improved. It's really improved, and we're going to go into a good next year, 2026.
And we're going to go into a good line of questioning right now when I ask you what is the most outrageous financial advice you've ever heard a buyer receive from a friend or a family member. Like, I'm sure you've heard a lot of people, this mortgage agent said this, or this person, this bank said that. What's the most outrageous thing that you've heard from someone out there to say to a buyer?
I don't know. You're putting me on the spot here.
Yeah, well, no, I don't want to put you on the spot, but there's got to be a lot of things out there that are just outrageous stories. I hear them when people are looking to buy and sell.
Okay, give me your story.
Yeah, I will, for sure. I think that when people are saying if you come in, you need to put in your offer way over the asking price because we're anticipating lots of offers here, and if you even want to be considered. And then I'll tell my buyer, you know, you've seen the house. The house is in X condition, X location, and it's going to be worth no more than it's worth to you because this is something that needs to mean something to you and that you need to be willing to invest in. So let's take a look at not the same houses because no house is the same, no two houses are the same, but let's break them down and compare them. We'd take some acreage, which is what we're buying. We're taking the living area of the house, two big things, and some of the condition. We'll say if this house sold for $1 million, and this similar one, it's red, it's not exactly the same, sold for $1 million, then the one you're buying is listed at $1.2 million, then maybe it's already a little bit over what a fair market value would be. So we compare it with a comparative market analysis. No two homes are the same, but we get as close as we can. And that would be outrageous for me to hear somebody say, you immediately need to go over asking, because asking is just that. It's a price that people hope to get. When we drill it down and see what it's actually worth, it's never worth more than it's worth to my clients.
Yeah. And that's why you are a great real estate agent. Very trusted.
I try to be.
Yes.
I really try to be. And we're going to take a quick break, but I'll be right back with the next topic after that. It's always good to know the fair market value of your home. Knowing what your home might be worth in today's market is critical, whether or not you're planning to sell now or in the future. Reach out now for a comparative market analysis. Happy to come over, have a look at your home, and give you a pricing completely free. 978-902-5646. Call whenever you like. And we're back. That's great. What's the most jaw-dropping, I can't believe someone tried this moment in your career? Things that you might see on an application or something that sounds a little bit off-kilter. Nothing like that?
No, I really haven't had that many crazy stories.
That's because you're always you're always working hard and you keep moving forward with all of it.
I mean, the crazy ones is like literally when they call you like a week before closing. Literally. And they were like, all right, are we ready? Like, I did a pre-approval, and they think, like, are we ready to close? I actually have had a case like that before, where it was like, they called, and it was like a week before, like 2 weeks before closing, and they didn't know. Like, after I gave them the pre-approval, then they got the accepted offer, then they actually had to go apply with me for the mortgage.
I mean, that's a big step to skip. Think about it.
And I was like, wait, you know, like they're like, do we need, it was a couple weeks away, so it was plenty of time to get it done. But it was one of those, that was like pretty funny that I was just like,
see,
wait,
that's your attitude.
what?
There's plenty
like,
of time to get it done.
Yeah,
And I love
like,
that because whenever there's an up or a down or a bump in the road, you know how to get around it because you have experience. How many years have you been doing this?
23 years.
23 years. Yeah. See, I mean, that the things that come out of your mouth are only with great experience. I wanted to ask you, this is a bit of a detour, what the most dangerous scam targeting home buyers and sellers is right now. We see all kinds of things. They're on the nightly news saying that this is happening, this is happening. Any type of scam that you're aware of right now that's very dangerous to home buyers and sellers?
Yeah, I think the biggest thing that's always been is that wire fraud.
Right.
The wire fraud, which the attorneys handle the wires, but the wire fraud before closing is a big thing, which I know you had.
I did have, but I'd like to hear what your security measures are to avoid that. You can just begin by the disclaimers in your email.
Yeah,
Love to hear that.
So we don't collect the funds. So the closing attorneys collect the funds. And the closing, and I do when I talk to my buyers, when we're talking like a week before closing regarding what they have to bring to closing, I always say, hey, listen, reach out to the closing attorney. They're going to give you the final figure for the closing, and they're going to give you instructions for either the bank check or wire. And I always say, and make sure if you are going to, they say, oh, I'm going to wire the funds. Make sure when you do the wire, make sure you talk to that attorney when you initiate it, get their wiring instructions, and make sure you call them right after you send that wire. So that's my check, but again, the attorneys do handle that. So even though we're the financing company, we actually don't handle the money for the closing.
But that's good to know because a lot of people, things change, and a lot of people need to know that. And you mentioned that I had a story, and I did. And long story short, there was a buyer for one of my listings. It was over $1 million, and we were a week before the closing, so they needed to wire those funds so the attorneys would have it for distribution to close the purchase. And evidently someone had been in their email for probably a long time and monitoring it, and they sent them the email saying where to wire the funds and when to do it, and they wired $500,000. And then that was on a Wednesday. Friday, the attorneys called and asked the client, we're ready for you to send the funds. Are you going to send the funds? And they said, what do you mean? We sent it on Friday. And $500,000 went to a scammer. And if they had found out, the FBI said, on Wednesday or Thursday, they probably would have been able to trace it back to its origin. But specifically because 48 hours or so had passed, they lost the entire $500,000, their whole life savings. And part of their deposit too, all because they didn't call the attorney and they didn't follow the wiring instructions. But I think that that's why I wanted to bring up dangerous scams, because I think a lot of these people are becoming incredibly sophisticated and making full advantage of the internet tools that are out there.
Yeah, I mean, we're pretty thorough in our checks and secure with our systems. But yeah, the one thing too is, you know, the occupancy is one thing that we're pretty strict about, and you hear that, the occupancy fraud, when someone says, I'm going to live in the property, and they don't live in the property.
Do you do any investigations? Does anyone from the lending institutions do any investigations to see if somebody says, oh, I'm going to be an owner occupant, to go out and see if they're actually living there or no?
They don't. I mean, unless they default on their mortgage, then they'll do
just
due
curious,
diligence on
because I've
it.
seen that
But
happen.
Typically, I don't think if they mail something, that's one thing. If they send you a piece of mail and it kicks back that you don't live there, I've seen that has definitely happened. And then they'll call the buyer and say, and then the buyer, you know, the homeowner will say, oh, I moved, you know.
And that turns it into an additional layer of fraud, doesn't it, when you use the mail?
Yeah, I've had that happen on a home equity line, where it was a little while after, but they ended up moving out, and the bank shut off their home equity line. They basically just said, like, you know, you have to pay us back.
That was a nightmare story, she could have said. Yeah.
It was a little while after, but, you know, again, like, you're not living there anymore.
Right, 100%.
Yeah.
Let me ask you, how do you balance being a mom of two with a career that never slows down? Because, I mean, you wouldn't even, with all due respect, you know you're a great mom, you wouldn't even know you have kids because you're always available when I call. And I see you in the office and you work hard. What's it like balancing all that?
I'm actually really good at like time management and multitasking. And not everyone is, but I'm pretty good at that. But it can be stressful. You know, sometimes if the kid's in the other room getting a call at night. So, I mean, I feel bad, sometimes, if they're in the other room, like waiting for me to do something. But I can manage everything.
You really
I'm
do, though.
Superwoman.
You are Superwoman, but with like no attitude and completely unassuming with it, and a good friend too for a long time. I appreciate that.
Yeah.
It's great to work with you. In the Coldwell Banker Wellesley office, I happen to sit next to Lesley whenever I can, and we sit there and we get all of our work done, but we can have a little chat about what's coming on in the mortgage industry. Where do you see trends? But being able to literally turn to my left and ask a mortgage question and not go to a bank, park, go in and wait in line. It's nice to have those connections as a real estate agent here in Natick and the area around to be able to offer to my clients. So it's not just me getting there, it's bringing the client to the best way possible to make sure the transaction can actually get done. Or like we said, maybe these issues can be worked on and solved and it can be done in a year. Above and beyond, I like the fact that none of us are in a rush. We're going to be here for the rest of our lives, and those are the type of people you want to work with, not someone who like seems on their end a little more motivated than you.
And I'll tell you, likewise, I enjoy working in the real estate offices because I can turn to you and say, oh, how was the real estate? How were the open houses this weekend? Like, how was the activity at your listings? That really helps me on the mortgage side.
Right.
It educates me, so I'm well aware of what's going on in the real estate market to help my clients with mortgages.
Yeah, and you know who really encourages that is our Vice President and Branch Manager, Chantel Persak.
Yeah,
she knows culture, and she brings a great group of people together, and it encourages us to all work together, and it's nice. It's not water cooler whispering and all that.
Right.
Everyone works together, and I think we can all lift each other up. It's a great way to move forward in a high volume office.
Yeah, exactly.
Yeah, it's been good. About how many loans do you do a year?
I wish I did a lot more than I did, but I'd say about 120 a year.
Wow, that's a lot, huh?
Yeah.
See, and I always think
it's been slow, so like refis, we're expecting refi volume to tick up a little bit.
Tell us a little bit
Hopefully
about that.
Hopefully about 30%.
Really?
Projecting for next year, because when the rates come down, we hit our refi booms.
And what percentage of your business is refis?
I would say the last couple years, a small percentage has been refis.
Okay,
so
of course, and we know why that because we just discussed the
25%.
fact that the rates had been established as low.
When the rates were at 2%, 3%. I mean, I was at an 80%, 90% refi. But the last 2 years, 3 years, with the rates upticking, we haven't had a ton of refis. But towards the end of this year, refis have picked up, and going into next year, we expect them to pick up a lot more too. So that'll help business a lot.
I'm sure that everybody has found this as fascinating as I have, with all the information that you have to offer, whether or not you're in the market to take a loan right now, or you are in the future, but it's information that we can share with everyone else. It's a little bit more than you see in the newspaper and that you see on the news. I like getting in depth with this, and we're going to have another. We're going to open the year with a 2026 mortgage projection and update when we come back next year. So Team Santini on Instagram.
Yes, Team Santini Mortgage.
Team Santini Mortgage, and it's Lindsay and Lesley. They're twin sisters, so they work together, and they have a brother, Rugo, in the business too. So look out on Instagram for them. And Lesley Santini, Vice President of Mortgage Lending at Guaranteed Rate. I want to thank you so much for joining me, and we'll look forward to seeing you the next time we come around. And I want to thank you for joining us today. We'll see you next time.